Hello, traders. It's Tuesday, September 22nd. We're about 2.5 hours into trading. Let's see what the market's doing. This is a daily chart of the SPY, but before I go there, I want to go and take a longer term perspective. This helps us put the current move into context. You can see that this is a monthly chart. That was a huge drop that we had in March. This is turning out to be somewhat of a bearish engulfing candle. If the market closes below the low from August, that will be a bearish engulfing pattern, and that would be bearish, especially off of a new all-time high. So we have to wait to see how the month finishes, but that would be very bearish. Let's go into the weekly chart. Here also you can see that off of that new all-time high, we saw instant selling and follow through. So that also has a bit of a bearish tone. This is what I would consider to be a failed breakout. Anyone who bought in here gets flushed out as soon as we cross back below it, and we're seeing some selling on the backside. These backside sell-offs can be very, very nasty. Let's go into the daily chart, take a look at that. Here we've got a drop. Ideally for bulls, they would want to see a nice, long, gradual rally back up because that would be a sign that the bid is very strong and that asset managers who missed the boat back in here are anxious to get in. Well, when you have that type of a bid for people playing catch up and the rally doesn't last very long off of this support, then you know that the selling pressure is still heavy and that sellers have the upper hand. We are below the 50-day moving average right now. I believe we are going to test the 100-day moving average. Now let's keep zooming in. Let's go to a 1-hour chart. And here you can see that right now for shorter term trading, I am watching this downward sloping trend line that we have on a 1-hour basis. If it's breached to the upside, I believe that this little gap from Friday's close to Monday's open will be filled, and we'll have a chance to maybe see a little bit of additional buying. Right now, as long as that downward sloping trend line is intact, I'm going to assume that we are going to see the market move lower. Now, finally, let's go into a 5-minute chart and take a look, a very granular look at what's happening today. And here you can see, I'm going to take off the major SMAs here so that we can get a nice clean shot of the market. And here you can see how we've got a high, a lower high. We may have another lower high. That would form a downward sloping channel that comes in about like this, and it would suggest that we're going to continue to move lower. You can see the 1OP indicators getting a little bit stretched, maybe ready to roll over. If it does, and this upward sloping trend line right in here on an M5 basis is breached, I will consider taking some short positions on stocks. Which, by the way, you can see how right out of the gate this morning, we had a bearish 1OP cross right here, right in here before the actual rollover. Once that upward sloping trend line was breached, we knew we could start taking some short positions. We sold stocks with relative weakness. Market came in, filled the gap from yesterday. Nice little bullish hammer right in here. Get a little bit of a lift off, and we have that 1OP cross. We have enough technicals here telling us that this is a market low. Came in and started buying some stocks. So we've been making money on both sides of the market. We're trading stocks with relative strength and relative weakness. That's what we do. So I'm going to be watching that H1 downward sloping trend line. I'm going to be looking for another lower high in here, and that should get some selling going on the downside. But overall, I don't think we're going to have a whole lot of movement. Now, this day right here, Monday, you would think could be actually very bullish. Why? Because the market sold off and they just weren't able to knock it down. And then we rallied late in the day. And as I was pointing out earlier, if the market would have opened flat and we would have just been drifting lower, and we would have closed on the low of the day, it would have had a much different feel to it. But the fact that that gap down was overextended, now all of a sudden it feels a little bit bullish. So the market should rally, right? Well, we had actually a similar pattern last week. If we go back to Thursday, we had another one of these big gap downs, and we had a flat market during the day, and we had a rally in about the last 30 minutes of trading. So it set a positive tone for Friday, and you would think that Friday we would be off to the races once that bid was confirmed. That's actually not what happened. The market started to sell off right out of the gate on Friday. We haven't seen that type of weakness today, but the day is still young. We've got a lot of trading left. There's the gap down on Thursday. You can see how the market tried to rally, tried to fill in the gap, couldn't quite get there. Another test, another test. Okay, well, now you've got 1, 2, 3 tests of the low. Yes, we're going to have a nice little closing finish. All right, that should set us up for a nice Friday, right? No. Friday, we actually saw some pretty heavy selling and the market closed on its low of the day. I believe that that could have in part been due to quadruple witching. Once the momentum is set, sell programs trigger and you start to see them feed on themselves. So Friday, we might have had that also in play, but that gap down Monday, we're not seeing the follow through yet today, but I suspect that towards the close, we may, because the longer term technicals are also not looking very good for the market right now. So I'm favoring the short side, but I'm just watching what the market's doing intraday, and I'm using this 1OP indicator as my guide and trading relative strength and weakness. So for today, I'm going to show you, we'll find 1 or 2 stocks that I like on the long side, and I'll also show you a couple stocks I like on the short side. Let's go into that daily chart because I have to show you a follow-up from a video that I did on Sunday night. I had suggested buying some puts on Apple because it was relatively weak. Now, one of the caveats to that trade was that the SPY would close below the 50-day moving average, and if it rallied above the 50-day moving average, we had to shut that trade down. Well, the SPY is still below the 50-day moving average, so that condition is still currently being met. Let's take a look at Apple, and let's see where it is. Well, you can see it had a really strong reversal yesterday, and it's trying to hold those gains, and it's trying to get above the 50-day moving average, but it has not been able to today. That's why we use closing basis. The stock can do whatever it wants during the day. Right here, you can see how it rallied above the 50-day moving average, but now it's back below it, and it's having a hard time holding it. It's actually weak relative to the market. Let's put the SPY chart back up and you'll be able to see exactly what I'm talking about. See how the stock has barely been able to move off the low of the day? Well, look what the SPY has done. It's been surging higher and it's almost to its high of the day. Apple's nowhere near that. It's barely hanging on to the gains from yesterday, even though the market is trading much higher. Apple is retaining its relative weakness. If we see the stock close below the 50-day moving average, you should stay in this trade. Now, yesterday, I didn't know that the market was going to gap 58 S&P points lower on the open because I did the video Sunday night. The futures, I think, were up maybe, or they were down about 7 points or so. Nothing too daunting. But here's what the stock did with that huge market decline. So yesterday on the open, the conditions for the trade were met, but man, what a horrible entry because of that gigantic drop that we had in the S&P 500. So can't really plan for that, but we're in the trade. I still think the trade is working. We've got 3 weeks of time left in the trade, and Apple still does look weak on a relative basis. Let's see if we get some afternoon selling in the SPY. Let's take a look at a couple of other stocks that I highlighted yesterday on the short side. I highlighted J&J. You can see how J&J from that video right in here continued to go down. It's still lower than when the video came out. Yes, it's weak relative to the market, and it is right below that 200-day moving average. That would be your stop on this if you were trading it from the short side on a swing trading basis. Incidentally, if you're not watching the market during the day, you should not be swing trading on the short side. Yesterday was a classic example. These rallies are violent. The snapback rallies during an 11-year bull market, during a 5-month bull market are violent. You cannot short the market on a swing trading basis. Not here, not now. So, day traders, absolutely. And if you have a really good swing trade that's working out for you and the market closes on a very soft note, then you can hold that overnight. Take some partial profits, hold some of it overnight. That works very well. In fact, I held some shorts over the weekend. Those turned out to be really nice trades yesterday morning. I exited them. So, J&J still looks good. Caterpillar was the other short that I highlighted yesterday. I've drawn an upward sloping alert line right here. You can see where it comes into play. I would like Caterpillar on a short basis based on that upward sloping trend line. You can see the 50-day moving average is pretty close to it as well. For a swing trade, I'd like it better if it penetrated that upward sloping trend line. Then I'd feel more confident that it could come down and test these major moving averages. So let's take a look at a few other stocks that I like on the short side. Then we'll flip to the bullish side very quickly. So I'm going to go in and I'm going to look at heavy selling search that we run. COF. We're going to go into daily charts. All I'm going to do is flip charts. I'm looking for that good daily chart. Aha! There's one that I like. MS. Banks are going to be weak. We have Jerome Powell testifying before Congress today. He's as dovish as he possibly can be, but we already know that. So banks are going to have a very hard time making money with 0% interest rates for a very long time. You can see that MS had this nice horizontal support level, many tests of that support, and how the stock has broken through it. And now it's through the 100-day moving average, and it's almost through the 200-day moving average. If it closes below the 200-day moving average, I think you've got a very solid short. Also, horizontal support right in there. Testing it. It's MS below the 200-day moving average. If it closes below it, I think you've got an excellent shorting opportunity there at minimum on a day trading basis, possibly on a swing trading basis. You can see how LYFT, that looks pretty weak too. Couldn't get through this horizontal resistance. Tiny little upward sloping trend here. Wouldn't give it too much credence, but if it's able to close below that horizontal support, obviously that horizontal support, I think you've got something cooking. I'm going to put a GTC alert right there, double click on that low, and now if it breaches that support level, I think that 1, 2, 3, we've got nice horizontal support that's been breached, couple of tails below it, but those don't carry as much weight as the actual closing price of the stock that day. So I think this is probably a pretty good level. 2720 is the level there. And I'm going to continue to go down. That looks pretty weak. Needs to get below the 100-day moving average. X tried to break out, pulling back immediately below the 100-day moving average. Not crazy about this one because it's choppy and it doesn't move much. EMB. Now that's a pretty nice looking chart there. You've got this tight compression after big rally, and now it's starting to roll over. This is Emerging Markets Bond Fund. So you can see how it's below the 50-day moving average, coming up on these major moving averages here. That looks pretty dang weak. Well, how could I possibly play this? Can I set an alert? I'm going to. I'm going to click GTC. I'm going to line this price level up with a bar right there. Looks pretty good. Double click on it. That's breached. Then I know I've got a good longer term trade. I'm going to take a look at a couple of other banks because they have been on the heavy selling list. Goldman Sachs. You can see how it is below the 50-day, the 200-day, and the 100-day moving average with a bearish engulfing pattern forming right now. Goldman Sachs, you can see how it's been drifting lower. I showed you how the market had been moving higher. I always like to have a 5-minute chart running behind my primary chart and option stalker so that I can always see what the market's doing. Market up, stock down. Relatively weak. It should be able to come in and challenge the low from yesterday. Goldman Sachs looks like a good short too. So Morgan Stanley absolutely below the 200-day moving average. That would be an excellent short. Goldman Sachs already is below those major moving averages. It looks like an excellent short. We'll put up JPM. It's the largest bank, so we'll take a look at that chart and see if that's also got some weakness. There should be pretty good weakness across all of the banking stocks, and there you can see JPM. We'll go into the daily chart. And yes, JPM is also below that 100-day moving average. I'm not as crazy about this one because you can see how tight the price action has been. A lot of horizontal movement right in here. I like the fact that Morgan Stanley and Goldman Sachs have actually rallied off of that base, and now they're coming back down below those major moving averages. I think they're going to have better movement on the downside, so I would prefer both of those for shorts. And I'm going to spend a very little bit of time on the bullish side. Let's see what we can find. We'll go into heavy buying. See what we've got there. ZM has been just an animal on the upside. There's a daily chart. You can see how it's just a rocket ship. BYND today, I really liked. I like that out of the gate. It's got a little bit of work to do to get through this 162 level. That's horizontal resistance. Lots of tails above body here. Tail above body here again. So once it gets through that point, though, I definitely like it. So I'm going to click GTC. I'm going to click on that candle right there twice. Now I've got an alert. If it happens to penetrate that, then we're going to know about it. Got Lululemon, nothing going there. I don't see anything that really looks good. Nike after the close today, so I wouldn't be trading that. Twitter actually looked pretty dang good today. I like this compression right here above the 50-day moving average. Relative to other tech stocks, it's been able to hold up pretty well. So you got that upward sloping trend line, gap higher today. Stock is near its high. Yeah, I think Twitter could go higher. Let's take a look for relative strength on a 5-minute basis. And there you can see that the market's been going up, and the stock actually has been going up pretty well too. It was able to make a new high for the day. So Twitter looks pretty good from a day trading standpoint. Roku was super hot yesterday. I think I'm going to leave it at that. Twitter right now looks like one of the stocks that I would probably be focusing on the upside. Target I also liked. I'm not huge on retail stocks right now. PINS, that looks pretty good. Let's take a look at the daily chart, and you can see how it's trying to break out to a new all-time high. Looks pretty dang good as well. And then finally, Target. I noticed that earlier today. Yes, Target also looks good. Here's what I like. Got the big gap up. It's going to try and test that gap. It finds support in here. You can see how during the market decline, the stock has been able to hold its own and actually work its way higher. Let's put up that SPY chart. There you can see the market selling, and there you can see the stock rallying. That is excellent. If I wanted to, I've got another way to view that information. I could put up the 1 OSI indicator, and the orange line above zero tells me the stock's got relative strength, and I can also search for that variable. So I can search for stocks with relative strength, relative weakness, heavy volume, all sorts of things. That's what I've got for you today. I like Target on the upside. That's going to be my long of the day that I like. It's a choppy stock, so buy bids, buy dips. Don't chase it. Don't buy breakouts. And on the short side, I like Morgan Stanley. I like Goldman Sachs. Stay the course on Apple. If it closes below the 50-day moving average, stay with those puts. As long as the SPY is also below the 50-day moving average, I don't think that is going to be in danger at all today. And look for late day selling and follow through. Good luck trading. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.